चैप्टर 12 ड्यू डिलिजेंस इन्वेस्टिगेशन एंड फोरेंसिक ऑडिट उसमें यूनिट 1 ड्यू डिलिजेंस बेसिक्स मीनिंग ड्यू डिलिजेंस is measure of prudence activity ordinarily exercised by prudent persons. It involves careful study of financial and non-financial possibilities. It is a process of investigation into details of potential investment such as examination of operations and management and verification of material facts. Areas of due diligence. Areas where due diligence may be undertaken are business acquisition and corporate restructuring, venture capital financing, public offerings. Audit versus due diligence. Difference between due diligence and audit. Audit is an independent examination of evaluation of financial statement to express an opinion, whereas due diligence refers to examination of potential investment to confirm all material facts of prospective business opportunity. It involves purview of financial and non-financial records. Due diligence aims to take care that reasonable persons should make before entering into agreement or transactions with another party. Importance of due diligence. There are many reasons for carrying out due diligence, including to confirm that business is what it appears to be, to identify deal killer defects in target company and avoid bad transactions, to gain information that will be useful for valuing assets and negotiating price, to verify that transaction complies with investment or acquisition criteria. Classification of due diligence. Due diligence can be classified into following manner: commercial operational commercial or operational due diligence, financial due diligence, tax due diligence, information systems due diligence, legal due diligence, environmental due diligence, personal due diligence. Process or scope of financial due diligence. If full-fledged financial due diligence is conducted in it would be included following matters in its scope. पहले मेन पॉइंट्स पढ़ लेते हैं. हिस्ट्री ऑफ टारगेट and promoter background, accounting policies, review of financial statements, taxation, cash flow, financial projections, management and employees, statutory compliance. इसमें से सब पॉइंट्स पढ़ लेते हैं. हिस्ट्री ऑफ टारगेट एंड प्रोमोटर्स बैकग्राउंड. Accountant should begin financial due diligence review by looking into history of accounts and background of promoters. Accounting policies. Account should study accounting policies being followed by target company and ascertain whether any accounting policy is inappropriate. Review of financial statements. Accountant should examine whether financial statement of target company is prepared as per statute governing target company and relevant accounting standard. Taxation. Check whether company is regular in paying various taxes as taxes to government. Cash flow. Review of historical cash flows reflect cash generating abilities of target company. It is necessary to check that is company able to honor its commitments to trade payables, bank, governments and other stakeholders. How well is companies able to its trade receivables and inventories? How well does it deploy its funds? Are there any funds lying idle? What is investment pattern of company and are they easily reliable? Financial projections. Accountant should obtain projections for next 5 years from target company with detailed assumptions and working. Management and employees. It is important to check that employee benefits like PF, ESI, gratuity and superannuation have been properly paid. Statutory compliance. It is important to make list of appropriate laws and checklist of compliance. Hidden liabilities, overvalued assets. Objections of due diligence will look specifically for any hidden liabilities or overvalued assets. Hidden liabilities. Company may not show any show cause notice as contingent liabilities. Tax liabilities under direct tax, indirect taxes. Long pending sales tax assessments. Pending final assessment of customs duty. Agreement to buy back shares, future lease liabilities, environmental claims, used labor claims under negotiations, overvalued assets, uncollectible receivables, obsolete non moving inventories, or inventories valued above NRV, underused or obsolete plant and machinery and their spares, litigated assets and property. Investments carries at cost through realizable value is much lower. Infructuous project expenditure or deferred revenue expenditure, etc. Group company balances not reconciled, intangible assets of no value. Contents of due diligence report. Examples of headings of due diligence report. Executive summary, introduction, background of target company, brief history of company, project, objective of due diligence, shareholding patterns, SWOT analysis, assessment of management structure, valuation of assets, operating results, financial liabilities, taxation liabilities, litigation liabilities, and net worth. Comments on future projections. Unit 1 ended.